Okay, good evening. My good students, good evening. Is Mwalimu audible? I want to confirm if Mwalimu is audible.
Yes, good evening.
Good. That is to say, Mwalimu is very audible. So I remember yesterday we had introduced basically this concept of basically analysis of financial analysis. And in that regard, we had looked at, we mentioned that at this point I'd be having two components, right? The first concept was in relation to common size financial statements, which we did a question in relation to common size. Also, on that same class, we had introduced a component of ratio analysis, and we handled at least basically that was liquidity ratios, which was very important. We looked at all the concept of a liquidity ratio. At the same time, Mwalimu gave us the notes in relation to everything in relation to ratio analysis, which basically in that case, remember the notes that we shared, we have them in our groups, right? We have them in our groups. So today, I want us, this will be the task of today. I want us to look at more two ratios category. Then we'll be looking at questions in our past papers. I'm having like 3 questions that we can do from our past papers. But first of all, make sure that you have the past paper. I'd also share the past paper in our groups, which I believe all of us, we do have what? The past papers in our group. God willing, today, I want us to summarize this topic so that in our next class, we'll be starting, we are going to start on the next topic. So, ratio analysis, we listed the item that we are supposed to have, which we mentioned that at this point, we'll be talking of the concept to do with liquidity ratios, talk about the turnover ratios, gearing ratio, profitability ratios, as well as what? The growth and valuation ratios. So today's session, basically, our focus will be on the turnover ratios. So therefore, we are looking at the turnover ratios. Talk about turnover ratios. Just as the word suggests, anytime you're talking of turnover, literally, we are looking at sales, right? The whole idea here is that anytime you're talking of turnover, what should come at the back of our mind directly is a component to do with what? With sales. You don't need to struggle much trying to understand what is this turnover. So anytime you're talking about turnover, my good students, what should come at the back of our mind is the component of what? The component of sales. That is very important. That's very important. So another item of basically turnover ratio, you can be asked, and this is very common with the examiner nowadays. He'll ask you to compute what? Efficiency ratio. You'll be asked to compute the efficiency ratio. Or if he's not using the word efficiency ratio, you'll find our good examiner will also tell you to compute what? The asset management ratio. All these are the same term. Asset management ratio. You see, asset management ratio. So in this case, anytime we'll be looking at either turnover ratio, or if you're asked of efficiency ratio, or if you're asked of asset management ratio, these are one and the same term. One and the same thing. Anytime of turnover ratio.
Hello, Malim.
Yes, please.
This is Mary.
Hi, Mary.
The writings are not very clear, please.
On the board?
Yeah.
Anyone experiencing the same issue?
Same here.
The board is not, you're seeing it to be blurry?
Yeah.
Yes.
So, let me see what I can do right now. Just a moment. I know very well if I increase basically the resolution, there's a very high chance that those with weak internet, they're going to find it Let me do this. Still blurry?
Not yet.
Not yet.
Still blurry. But this one, you must be having a very good internet. If at all I was to switch on this resolution, then you must be having a very good internet. That one must be very, very clear, but that one must be having very good internet, right?
Yeah.
Right now, it's very clear, I know.
Very
Yes.
clear.
Right now, I know it's very clear. So with this, it's going to consume a lot of your bundles. So for those who are using bundles, it will be unfortunate, but those who are using Wi-Fi, they just be very good to go. Right now, I'm very sure it's very, very clear. So looking at it, in this case, you are saying that we are talking about the turnover ratios, efficiency ratio, or asset management ratio. So I want us to know something and say about this. We can already say that the turnover ratio indicates the efficiency. Turnover ratio indicates the efficiency with which the firm utilize the asset or resources. Turnover ratio indicates the efficiency with which the firm utilize the asset or resources at its disposal to generate sales revenue or turnover. I repeat this statement again. We are saying that the turnover ratio indicates the efficiency with which the firm utilized the asset or resources at its disposal to generate sales revenue or turnover. That's why we mentioned that anytime we'll be looking at basically the concept of the turnover ratio, or rather efficiency ratio or asset management ratio, what should click at the back of our mind is a concept to do with what? The concept to do with sales. That is very important to note. So what are these turnover ratios that we'll be talking about? First of all, let us list them. Then you are going to analyze each one of them separate. So this is to say, I'll be having the following. Number one, we can talk of the stock or inventory turnover ratio. Stock / the inventory turnover. Stock / inventory turnover. We'll be talking of number two. This is what you normally refer to as the stock holding period. Stock holding period. Stock holding period. Number three, my good students, will be talking of the debtors. Debtors / what you are referring to as accounts receivable turnover. Accounts receivable turnover. Accounts receivable turnover. Okay. Number four, we'll be talking of the debtors collection period. Debtors collection period. Debtors collection period. We'll also be talking of number five, what you are referring to as the accounts, or rather talk about payables. Talk about aspects of payables turnover. These are literally payables turnover. Okay, talk about payables turnover. Of course, number six, we'll be talking of the payables payment period. Payables payment period. Payables payment period. Number seven, we can talk about what we might refer to as the fixed asset turnover. So about fixed asset turnover. Number eight, we can talk about what we normally refer to as what? As total asset turnover. Total assets turnover. So these are the ratios that we'll be looking at under turnover ratios. And on this point, I think there's a very good question which was tested, and it had almost majority of this concept. There's a question, so I can't remember it was clearly which period, but it wasn't that long. Let me check on this case. Let me share this question paper. There was a very good question in relation to all these items. This should be which year where my past papers. So that when we'll be looking at it, we'll also be looking at this question from our past paper. It was a very good question, actually. I believe by now all of us, we do have the past papers, because I'd share the past papers in our group. Which I believe by now, all of us, we should be having the past papers. All of us, we should be having our past papers. So there was this question in relation to whatever that you're doing now. Let us go to, it was a question, a very good question. I think we'll be looking at it as you're working out these ratios. This was, and I know majority of the students actually, they were caught off guard with that question. But you'd find that it was a very good question. Yeah, this is a question. I want you guys to check this question. All of us, you must be having our past papers. All of us, you must be having our past papers. This was but it was a good question. So I can't recall it was which sitting, but it was a very good question, which I wanted us to. This was the net profit margin. These are types of ratio. Compute the following ratios. This was which year? The first bit was we know this question. This was December 2021. December 2021, right? The pilot paper. Question number. This is question number 5, where you are asked to compute all these form of ratios. See, you're given 1 mark, 1 mark, 1 mark, 1 mark, like that. Then the same case, we are also asked to, this is of course common size reports. Remember yesterday we did common size, right? Yesterday basically we did common size. Common size. There's a good question which had whatever that I wanted us to do right now, but of course we'll be looking at it as we proceed. Yeah, this is which year? This is December 2021. December 2021. Question number. This is question number 3, part C, where we are. These are what you are doing now. The aspect of course, we'll be looking at a gross profit margin, return on capital, the inventory turnover period, trade receivables collection period, trade payables period. So these are questions December 2021. We'll be looking at it right now. So that is to say, let us first of all analyze. After we've analyzed, then we are going to look at it. So we start with the first ratio. So let me return this to the first ratio. We are starting with the inventory turnover. So when we are talking about stock or inventory turnover, we said everything we are going to relate it with sales, right? We are going to relate all these things with sales. So to do this, let us mention something a bit, because we mentioned our main task is not to cram the formulas. Our main task is simply to understand the whole concept behind it. So we can mention a brief, we can mention briefly in relation to the inventory turnover, where we can see that the ratio indicates the number of times. This ratio indicates the number of times. This ratio indicates the number of times inventory was turned into sales in a year. It indicates the number of times inventory was turned into sales in a year. So these are what you're having. To determine our inventory turnover, we should be talking of cost of sales. Cost of sales, we divide by our average. You see, we divide by our average stock or inventory. So to determine our inventory turnover, we are looking at the cost of sales we divide by our average inventory. So whatever our target here is, our target is to determine how many number of times did we convert our stock into sales. And many times you'll find that the higher the stock turnover, the better the farm, and more likely the higher the sales. So the more number we convert our inventory into sales, that is the better for the farm, because this will reflect that we are having higher sales. You see, so this is all about what? The inventory turnover. We just want to determine the number of times we converted our inventory into sales during a particular year. That is very important to note. That will take us to number 2. Number 2 here, we'll be looking at, of course, whatever that we are referring to as, of course, stock holding period. Stock holding period. These are number 2. Stock holding period. The stock holding period. A very important concept. I believe that now my board is clear. Mary, is the board clear on your end?
Yes, it is very clear.
Great, great, great. I believe that all of us, Carol, is the board clear on your end? I believe that the board is very clear to all of us. I believe that the board is very clear to all of us. Great. So we proceed to this item that we are referring to as the stock holding period. So what is a stock holding period, my good students? You'll find that we mentioned something on that and say that this ratio indicates the number of days. This ratio indicates the number of days. This ratio indicates the number of days. It indicates the number of days. The inventory was held. The inventory was held in store before being sold. This ratio indicates the number of days the stock was sold in the stores before being sold. Before being sold. Before being sold. Before being sold. So the next question would be, how will you be able to determine your stock holding period? So to determine our stock holding period, this is simple. To determine our stock holding period, we just want to determine the number of time or days that we literally held this inventory in our store before they were sold. So therefore, I should incorporate the number of days in a year. So I'll be having the number of days in a year, number of days in a year that will be given. Of course, we are going to divide this by the stock turnover. We're going to divide this one by stock turnover. So you realize that whatever that we've studied on the first bit will affect us directly on the second component. That's what you're going to realize here, my good students. That whatever that we've studied on the first bit will affect us directly on the second stage. Alternatively, we can also determine our stock holding period by considering the following. Alternatively, our stock holding period, my good students, can also be determined by taking our aspect of the number of days in a year, number of days in a year, okay? You multiply by your average stock. You multiply by your average stock. I'm going to show you all the tricks. You take number of days in a year, you multiply by the average stock, you divide by your cost of what? Cost of sales. This one will also give you the number of days that you are holding our inventory in store. That is very important to note. That is very, very important. That is very, very important to note. So you'll find that basically once we have that, we normally consider it as a form of basically assisting us in understanding or basically measuring our efficiency in terms of selling our inventory. So that is in relation to the stock holding period. That should take us to the next item here, which we are referring to it as the accounts receivable turnover. Accounts receivable turnover. So allow me to erase here. Allow Mwalimu to erase at this point so that we check the next bit here, which is also very important. We are talking about the accounts, talk about receivables turnover. Accounts receivables turnover. So you're having accounts receivable turnover. You see, we're having accounts receivables turnover being our number 3. And what will this entail? I'm going to give you in a summary way. Hatuna maneno mwingi, you don't have a lot of stuff to write. So long as you're getting the concept right, get the concept, understand how we're achieving that. If you're able to master that, you just be very good. No cramming formulas, no doing what. Just a matter of you understanding the concept, having the formula correct, you're just good to go. So we are in accounts receivable turnover. Just as the word suggests, we are bringing in debtors. Accounts receivable, these are just like debtors. Yeah, they are debtors literally. Other term for debtors. So what will this entail? What will this entail, my good students? You'll find that anytime you're talking about the accounts receivable turnover, the whole idea here is that we want to look at the ratio that will indicate basically the number of times in which credit customers were converted to what? To sales. Because the accounts receivables, these are credit customers. So our target is to determine or to achieve how many number of times were we converting our credit customers to actual sales. So briefly, I want us to put this down. And say that this ratio indicates the number of times. This ratio indicates the number of times with which credit customers. This ratio indicates the number of times with which credit customers were turned into sales. Were turned into sales. I repeat, this ratio indicates the number of times with which credit customers were turned into sales. In other case, converted into sales, right? So therefore, most importantly is to understand how are we going to achieve this turnover. So therefore, to determine our accounts receivable turnover, this will be simple. To determine our accounts receivable turnover, my good students, you realize that this will be very simple. Why is the Mwalimu saying it is simple? Because all you need to know is we are dealing with credit customers. So therefore, if we are dealing with credit customers, we are dealing with what? Credit sales. So talk about annual credit sales. Talk about your annual credit sales, whatever that will be having as our credit sales. We are going to divide here, my good students, by what? We are going to divide by our average debtors. See? Average debtors. So we have, remember, keyword is what? Credit sales. So in the event that you're given total sales and you're told that maybe this was inclusive of the cash sales, we don't consider cash sales at any given point. I want to determine the receivables turnover. Our focus is only on the sales that were done on credit. That is very important for you to have in your fingertips. That's very important for you to have in your fingertips. So you're looking at the number of times, basically, in this case, we converted this into what? Into sales. Very important to know that. So you'll also realize here that, at this point that the higher the data turnover, the better the firm. The higher the data turnover, the better the firm, because it indicates that at this point, we were collecting a lot of our credit sales. We were collecting a lot of our credit sales. So that is very important to know. Now, unless there's a question, Mwalimu will want to proceed to the next item, which is part B or number 4. Unless there's a question, kindly, any question where you feel like, truthfully, Mwalimu, at this point, I'm not getting the concept right. If there's that question that you want to ask, this is the best time to ask, my good students. If you're having a question to ask, this is the best time to ask your question. That will take us to debtors collection period or accounts receivables. Talk about receivables collection period. I'm having receivables collection period. Receivables collection period. Receivables collection period. Receivables collection period. By looking at that time, one can tell us what would that indicate. Someone can try. Someone can try. Jael, what do you think? By looking at this term, receivables collection period, what will come at the back of your mind, Jael? What do you think?
May I try?
Yes, please.
I'm Saadi. I think number of days divide account receivable turnover.
Number of days?
Divide account receivable turnover.
You are giving us basically the formula. What about the whole concept about it is?
How many years? How many days takes to collect the amount of debt?
Nice one, Sergio. Nice one. That is good. Another trial, Carol. Carol, can you give us something? Carola, we haven't heard your voice. Tell us something. Guhad, you want to try? Go ahead, please.
I think this refers to the credit period that was granted to the debtors.
The credit period that was granted to the debtors. Yeah, that is okay. That is very okay. So because we're looking at it in terms of the period, because remember at this point, we want to determine basically these guys are going to pay within a given period of time. So we're looking at that, the credit period that actually is granted to our debtors, which is very okay. And the same concept, what basically we were told with Sadio, so the same concept applies. So at this point, briefly, we can just mention and say briefly, just brief. We have all other things. So briefly, you can mention and say that, of course, this refers to the credit period that was granted to the debtors. This refers to the credit period that was granted to the debtors on the period within which they were supposed to pay their dues to the firm. Credit period that was granted to the debtors on the period within which they were supposed to pay, their dues, So that is to say, for us to determine our receivables collection period, these are what you must always tend to have. Sadio had told us this, that we are going to take the number of days in a year number of days in a year, number of days in a year. We are going, of course, to consider our debtors turnover, or rather receivables turnover. Receivables turnover. These are what you're going to have. These are what you're going to have. So after looking at that bit, of course, you can proceed to the next concept. The next concept basically here, we'll be talking about the accounts payables turnover. Accounts payables. So the same concept relates to receivables, but now we are talking, that's the beauty with financial reporting. Once you're able to understand one concept, you'll find that the other bit will just be directly related to whatever that you handle. Now, whatever that we are changing here, instead of talking of receivables, we are looking at what? Accounts payables. You see? Accounts payables turnover. Accounts payables turnover. So this is the only thing that is changing in terms of same concept applies, but right now we are talking of what? Payables. Payables, in other words, we are referring to as creditors. Payables, in another words, we are referring to them as what? As creditors. So you will find that when you are talking of basically, of course, the payables turnover, in this case, we just want to look at the number of times in a year the firm bought goods on credit. The number of days in a year the firms bought goods what? On credit. And of course, after paying for their suppliers. So in this case, we are talking about accounts, or rather payables turnover. Payables turnover, meaning that you're meeting obligation when the time falls due. So payables turnover, we'll be having, of course, talk about we are taking our items on credit. And the items that we are taking on credit, we normally refer to them as what? Credit purchases. So therefore, I'll be having our annual credit purchases. Annual credit purchases here. Annual credit purchases. Of course, we are going to consider our average payables. See, we are going to have our average payables. We are going to have our average payables at that point. So that is what you should be having. That is what you should be having. That is what you should be having in relation to what? Accounts payables turnover. In relation to accounts payables turnover, which at the same time, look at this case. Look at this case. Talk about what? Payables. Payment period. Relating directly to what we are doing here. Number 6. Relating directly to what basically we are doing at this point. So therefore, I'll be talking of what you are referring to as what? The payables payment period. Payables. Payables payment period. Payables payment period. Payables payment period. Very important. So what is this payment or rather payables payment period? Relates directly with what? The receivables basically collection period. So here we are looking at the payment. So we'll find that at this point we are looking at that period that we were granted by our suppliers. It indicates basically the credit period that us as business, this is a period that you are given by our suppliers to pay our obligations. To pay our obligation. That duration is what you are looking at it as what? As payables payment period. I believe you have these short brief notes basically with us. So in this case, what you are talking about here, we are looking at the payables payment, or rather payables payment period to be, of course, the number of days in a year. Number of days in a year, right? We are going to divide by the, of course, this number of days in a year, we divide by our creditors turnover, or rather payables turnover. We divide by our payables turnover. So these are what we should be having. These are what we should be having. These are what we should be having. I believe that, guys, we do have all this basically the other bit, which on this case, for us to make sure that we are understanding this concept, let us go to this question of ours. Let us go to this question of ours, which was, of course, was tested back in 2021, the question that we've just seen right now. That was actually look at it from this bit. Look at it from this bit. Actually, from part A. Look at it from part A. Look at it from part A. Look at this question basically from part A. I believe all of us were there. Make sure that if you don't have this past paper, just notify Mwalimu to reshare again in the group. If you don't have the past paper, notify Mwalimu to reshare this on the group so that all of us, we should be on the same topic kindly. We should be on the same page.
No.
You have it? You don't have it?
Yes. This is Mary. I don't have the past papers.
Mary, I think kindly someone to reshare on the group. Kindly to someone to reshare that paper on the group. But Mary, you're on the group, right?
Yes.
Someone to reshare that paper so that Mary should have the paper. Kindly, someone. You can help Mwalimu with that. You can help Mwalimu with that quickly. Someone to reshare that question with Mwalimu.
Thank you. I've received.
You received?
Yes.
Great. So believing that now all of us, we are there. Believing that all of us now, we are there. Believing that all of us now, we are there. Anyone else? So like part A of the question, look at this case. Look at this case in part A. These are what our good examiner is asking us, right? Various analytical tools are today utilized in financial statement analysis. Some of these tools include, number one, ratio analysis. And number two, trend analysis. And number three, the common size financial statements. We did this, right? So this is a question. In the context of the statement above, describe how each of the above tools is utilized in practice. How many questions? How many marks? 6 good marks. 6 good marks you're given. So how is this concept being used in practice? That is what you need to, first of all to do what? To identify. How do you normally tend to use this in practice? So number one bit, what you must always tend to agree is that whenever we are talking of ratio analysis, you'll find that it normally helps us to compare the ratio against our competitors. That is, of course, of the same company. So it provides us with an information of the financial position of a company in relation to what? In relation to our competitors. So by now we do understand clearly what ratio entails. So being a financial indicator which will help us to determine or to compare our company's performance by telling us basically what is happening in relation to activities. So you'll find that in practice, we normally tend to use ratio analysis basically to compare our firm with the other firms that are in the company that are our competitors. This will enable us to project our future results and basically evaluate our performance clearly. That is ratio analysis. What about trend analysis? Trend analysis will find that basically, just as the word suggests, looking at a trend. Trend is something that, if at all I was to say that, you know what, maybe Dennis, your trend is to do this and this and this. It's something that you're used to, right? It's something that basically I can literally predict. So relating it with what you're doing in basically finance, anytime you're talking about trend, it refers to that aspect of comparison across the time periods. Say, for example, we can look at, for me to term it as a trend, it should be at least more than 3 years. If it is 1 year, maybe it has happened by chance. Second year, maybe by chance. But if it's the third year, this is now what you're referring to it as a trend, something that has occurred on several occasions. So, answering the question of this bit, how we normally tend to use it practically, you'll find that the trend analysis normally provides important information regarding historical performance and growth. Because of this history, you'll find that it will be very easy for us to plan and forecast. Because I'm having, this is how this company has been performing. So if this is how this company has been performing, therefore we can use this data to predict whatever is going to happen in future. So you'll find that majorly it is used for what? For planning and forecasting practically. For planning and forecasting practically. What about the other item here, which you are referring to it as the common size? Remember yesterday we did common size financial statements. Yesterday we did common size financial statements, where we are looking at it in a sense that I am preparing our books in form of percentages. That is what we talked about, basically, the aspect of common size. So you'll find that in this case, it is going to help us now practically. Like when you are talking of the items of income statement, you are expressing them in form of sales. How is this important? So you'll find that expressing our financial data basically in relation to a single financial item as a base, it will help us basically to come up with a forecast in relation to, I'll note and say that, you know what, our administrative expenses based on what we've collected is a percentage. So this will help us in operational efficiency. Understanding that why are we spending so much money in administrative expenses based on what we've collected. So the whole idea of common size financial statement will majorly help us in relation to what? Operational efficiency. Operational efficiency. So this that is common size. So you'll find that this is how we normally tend to use them in practice. I don't want to give you a specific item to write. I want you guys to have the knowledge. If you're having the knowledge right, you can put exactly this item the way you've understood on paper. If you wish, Molim will give us something to write in relation to that. If you wish, Molim will give us something to write in relation to that. But ideally, that is the whole idea of how we normally tend to look at it practically. We proceed to the next item here. The next item, our good examiner basically asked us here, part B of the question. Summarize 4 attributes of a good financial statement analysis. Summarize 4 attributes of a good financial basically statement analysis. How, at what point will we say that whatever that you are having as a basically financial statement is well prepared? Number one item, the attribute of a good financial statement analysis. Number 1 is what? Understandability. Whatever that you prepared should literally be understood by all these shareholders without a lot of questions. So number one item in relation to the attributes, we are talking about what? Understandability of the information that has been displayed in our financial statements. That is number one. Number two attribute. Talk about what? Reliability. Number two attribute. Talk about what? Reliability. So how is this a good attribute? You'll find that reliable information is always free from any material error and biasness. That is to say, the information that a user can depend upon to present, or rather to represent, the company's financial situation. In that, if at all I was to make a decision based on Darasa, this is information that I'm having, which is basically reliable. So that at any given point I'm making this decision, basically this will be based on the reliable information that I've collected. So it is free from any error or biasness. Number three, comparability. This is to say that the information should be presented in a consistent manner over time. So that if I'm presenting my statement of financial position, the format that I'm using should be basically consistent with what I've been presenting all through. It should not be a case that maybe, for example, cash flows, for example, this year I'm using direct method. Next year I'm using indirect method. The other year I am using direct method. You see, there's no consistency there, and therefore comparing the performance in these two periods, it might be a challenge. So we are saying that at this point, for a good financial statement analysis, we are talking of comparability. That is very key. That is very, very key. The other key information that we must be having always for a good financial statement is what we normally refer to as what? The relevance. Relevance of the books. In this case, we are looking at it in terms of I should be having the information there should be defined in terms of whether it influences our economic decisions of users. Because if you are giving me an information of 5 years ago, this information is not relevant today because there are so many things which are changing in the market. Inflation rate, talk about the aspect of that time value of money, talk about geopolitical factors. There are so many things that have literally changed. So whichever information that should be presented in the financial statement should be relevant, And that's what we're talking about, what? The relevance. Among so many other attributes we can mention. So we've talked of basically 4 main attributes for now. We've talked of understandability, we've talked of reliability, we've talked of comparability, we've talked of relevance. So we have so many. Attributes. So with that case, up to now, you have your 10 marks. You see, you have your 10 marks. Proceed to the next question, part C. Part C, the question is what you are told. The following are extracts of financial statements from the books of Zawadi Limited. I am given the sales revenue for 2020 and the sales revenue for 2021. This data is literally for 2020 and 2021. The extracts of the statement of SAP as of 30th April, I'm also given at this point. Then look at this. The examiner has requested us to, number one, analyze and interpret the performance and efficiency of the company for the 2 years ended 30th April 2020 and 2021, using number one, the gross profit margin, return on capital employed, inventory turnover period, trade receivables collection period, trade payables payment period. You are given 10 good free marks. You're given 10 good free marks. This is what the examiner has given us. So where are we going to start from? Where are we going to start from? That will be very easy for us to work it out. So at this point, therefore, we should start working it out. I believe that we have this question. I literally want to remove this question so that we can use our board. I want to remove this question so that we can use our board. I want to remove this question so that we can use our board. So make sure that if at all you don't have it, make sure that you acquire that question. Mary, are you in receipt of the question paper? Has someone reshared on the group?
Yes, I'm okay.
Great. So let us work it out. Now allow me to remove this question so that you can use our board. So that you can use our board to basically work it out. So you find that the beauty part with financial reporting is once you're able to understand and grasp these basics, things will always tend to be very, very easy. You won't struggle much, by the way. You won't struggle much on this. So understand the concept formula. You're just good to go. You are just good to go. So number one question in this case, the examiner wants us to compute the gross profit margin. Gross profit margin for years 2020 and 2021. So the next question I'm going to ask myself is, do we know how to determine our gross profit margin? Mwalimu has shared this notes. We have it. Gross profit margin. We know very well that for me to determine my gross profit margin, I'm going to talk of our gross profit here. We divide by ourselves times 100. Yeah, this should give us a gross profit margin. So in our question, we are determining it by considering year 2020 and talk about 2021. Someone to give me the gross profit in 2020. What were we having? Gross profit in 2020. Someone. You guys, you have a question. Instead of Mwalimu coming back to the question, guys, you can give Mwalimu the question.
That is 103,812.
What is our gross profit?
103,812.
103,812. That is for 2020, right?
Yes.
So I'm having 103,812. Our figures, were we given in thousands or we are given in full?
In thousands.
In thousands. So 103,812.
Yes.
Is that okay?
Yes.
What about our sales? Our sales in 2020?
No. Hello,
Our
Mwalimu.
Sales in 2020? 476.
Yes, 476,200.
476,200.
But Mwalimu, your board is not so clear.
Oh, I know. I've removed that. Let me share this. That should be very clear.
Yeah, that is very clear. Thank you.
So we are having that. That should give us what percentage? Kindly, someone quickly. That is a 103,812.
1.8%.
1 point?
21.8.
21.8%.
Yes.
So I'm having 21.8%, believing that all of us are getting the same value. Can you give me for 2021? Just give me the final answer. Work out for 2021 quickly. Give me the final answer. I'm waiting so that we practice. I want us to practice. Let us do it practically. so that you should not be like you're just watching a movie. Those who are there should also work it out.
16.79, 7.80.
Yeah, 16.
0.80 when you round off. 16.80.
16.80. So 16.80. Is that the same figure that all of us are getting? Can you confirm if at all the same figures all of us are getting, so that we should be on the same boat?
Correct.
Yeah? Same values, all of us? Kindly?
Yes, correct.
Great. The other bit here, the examiner wants us to compute the return on capital employed, right? Rocher. Return on capital employed. We know very well, based on our notes, that for us to determine that, I'll be looking at EBIT over capital employed. EBIT over capital employed. EBIT over capital employed times 100. EBIT is simply earnings before interest and tax. That's what we're referring to as EBIT. Earnings before interest and tax. We divide by the capital employed times 100. That should give us, of course, what? That should give us whatever that you're having there as basically Rocher. And how will you determine your capital employed? Capital employed is very easy. For you to determine your capital employed, you just take what? Your total assets minus current liabilities. That should give you, of course, what? Your capital employed. Capital employed. Your total assets minus current liabilities. That should give you capital employed. Also, we normally refer to it as what? As net assets. Net assets, right? Net assets, net assets. So what will you be having here? What will you be having? What is our earnings before interest and tax? Are we given directly there? Check your question. Earnings before interest and tax. Are we given? I'm given our profit before tax. I'm given our profit before tax, right? 2020, what is our profit before tax that the good examiner has given us? Kindly give me the
50,000.
Yeah?
50,850 for
Profit
2020.
before tax, 50,850.
50.
Remember, what are we looking at here? We are looking at earnings before interest and tax. So, is there anywhere where we are given the component of our interest in our question? Remember, interest is the same as what? Finance cost. Interest is the same as finance cost. In that question of ours, are we given any finance cost anywhere?
Oh, yes.
Are we given finance cost anywhere? Guys, you have the
yes.
200.
Yes.
You're given finance cost, right? Because
Yes.
like in this case, yeah, you can see my profit before tax is 5850. But for us to arrive at this point, there's a component of interest, which is finance cost that was deducted. So how will we go about this? We need to add it back. We need to add it back. We need to add it back because we said that for me to determine our share, we are talking of earnings before interest and tax. So we add our finance cost here. The finance cost is how much? The finance cost is how much?
200.
So we add that value of finance cost, which is basically 7,200. So this should give us a total value of how much? Should give us
58,050.
58,000, 5850, 7,200 to give us 58,050, right? 58,050. So my earnings before interest and tax, I'm having 58,050. We divide by the capital employed. Were we given capital employed? We can determine that, right? Many a times, of course, will not be given, but it will be upon us to determine that. The capital employed. Capital employed, remember, Molimo has said that for us to determine our capital employed, we are talking of our total assets minus our current liabilities. Minus our current liabilities. Make sure that you understand this very well, because the next thing you're doing it on your own, the 2021. So I want a good student to give me my total assets. What are we having as our total assets in this case? Based on the question. Total assets, my good students, total assets. I didn't want to share this question, but you're forcing Molimu to share so that we can confirm. So, if at all we are talk of our total assets, I'm having how much?
206,695.
This is total. These are literally, these are current assets, right? So total assets, I can see I'm having 10, 18, 140 plus. Total assets. See, I'm having the non-current assets, which is what? 10, 18, 140 here. 10, or rather 10, 10, 0, 18. 10, talk about 10, 18, 140. 1,018,140 plus our current assets, which is 236. 236,685. That is our current assets. Guys, I believe we are on the same page. I hope Mwalimu is not doing his own things here without us understanding. We are taking our non-current assets, which is 10, 18, 140. We are adding our current asset, which is 236, 695. That will give us our total assets. Remember, we're looking at capital employed. So that in this case, my total asset will be how much in total?
338,505.
So I'm having that value. You said how much?
308,505.
338. If you add, I'm getting 1,254,835,
835.
right? If you add.
Yes. Yeah.
So this is my total assets. What about our current liabilities? Current liabilities, we're given a value of how much there?
179,835.
179,835. Good. So what will be my capital employed? What will be my capital employed?
1075,000.
10?
75,000.
1075,000.
Yes.
1075,000. So therefore, I'm having my capital employed. I should be having the 58,050. Of course, at that point, we divide by our value, which you are giving Molimu, which is 1075. So literally, I'm having 1075. So what will we be having as our value there? What will you be having? 1075. 1075 times 100. That will give us what percentage?
Five
point? 5.5.
5.4.
5.4%. So I'm having 5.4%. The same concept, I want you guys to give me for 2021. The same concept give me for 2021. The same concept give me for 2021 quickly. The same concept. If you understood for 2020, 2021, it would be very easy. 2021 should be very, very easy. Work it out quickly, kindly. Work it out quickly, kindly. Work it out kindly, quickly. Mwalimu is waiting, Mwalimu is waiting, Mwalimu is waiting, Mwalimu is waiting. If you understood the first one, then that one will also be very easy.
Two 2.8%.
2.8. I'm given 2.8%. I'm not sure if the same thing that all of us were getting. Same values. 2.4. 2.46%. 2.56. Almost because of maybe decimal, almost same figures, 2 point something percent.
2.8.
2.8%. So we're having two guys giving us 2.8%.
2.8.
2.8. So majority of us are getting 2.8. Okay. So believing that basically that is what you're having. Believing that the rest basically we're achieving the same thing, right? Believing that the rest basically we're achieving the same values. 2.8, Evans is giving us 2.8, great. So then I'm going to agree with you that if at all that is what you're getting, then that is correct. If at all of us, or majority of us, you're getting that 2.8%. So the other bit here, a good examiner wanted us to determine. The other question was, let us pose that question. A good examiner wants us to determine the inventory turnover period, whatever that we've just done right now, right? The inventory turnover period, inventory turnover period, inventory turnover period. And in this case, Molimo has just done this one right now. Inventory turnover period, which I know very well. That one you can do it very, very, very easily. Inventory turnover period. Can you give Molimo that one quickly? Can you give Molimo that one very quickly? Give Molimo that one very quickly. Do you have a formula, or do you want Molimo to give us the formula again? Remember, you can either use two formulas here, right? You can either use two formulas, the inventory turnover, This one, we just looked at it right now, where we say, number one, you can either go with a cost of sales, right? You divide by your, of course, average stock. Alternatively, you can decide to use this other method of you having your average stock. You multiply by the number of days in a year. In this case, a good example has given us how many days in a year? A good examiner had given us how many days in a year? 365. So you can either take average stock times 365 days. We divide, of course, by what? Our cost of sales. So decide which method you are using. If at all you are to use the cost of sales, or rather the first bit, which is cost of sales of average inventory, I'm having the cost of sales here, which you are given. Let me share the question. Cost of sales, I'm given there 372,000. So I'm given 372,000. So I'm having 372,388, right? We divide, of course, by the average stock, or rather inventory for that period is 81,000, right? Our figures were in thousands. Yeah, they were in thousands, so that's okay. So what will we be having?
$81,200.
How much?
81,200.
81, that is after dividing. $81,000. It can be 81,000 days. Work it out.
Yes, I'm getting 7.94. I don't know whether we can round off to a whole number so that we get days.
My answer is 4.5, 4.6.
Teacher,
Sorry for that. Yes, you're getting how much? How many days?
This is Evans.
Yes, Evans.
I'm getting 7.994. I don't know, should we round it off to 8?
Yeah, you can have it to 8 days.
Okay, so I got 8 days.
8 days. All of us, are we getting the same value?
5 days.
5 days. How are you getting 5 days?
When you divide.
372,388, right?
Yes.
Divide by 81,000.
Yes.
5 days, right?
Yes.
Evans, how are you getting 7.9?
First of all, what I did is to get the inventory turnover. So the cost of sales is 372,388 divided by the average inventory, that is 81,000. I got 45.97. Then to do the periods, I did 365 divided by the turnover.
You said you took what?
Uh,
I haven't gotten whatever that you mentioned clearly. I'm not sure if I'm the one you've taken.
I'm saying to get days, after getting to get days, I did 365 divided by the turnover that I got, inventory turnover. Yeah, then I arrived at 7.94.
Actually, you see, these are we having these are holding period. Kindly don't confuse, right?
Lecturer.
These are the second one is holding period. See now, and the first one is inventory turnover. So what are we determining? We are asked inventory turnover, right? Evans.
Yes.
So how do you determine inventory turnover? You take your cost of sales
Divided by the average inventory, yes.
Average inventory, right?
Yep.
So you're saying how did you determine your average inventory? Why are we having the number of days there?
Teacher.
Yes.
I want to ask you one more question.
Yes, please.
Okay, when I'm making an average stock, should I take only for year 2021 or added two of them and divide two?
In such a case, whenever you are looking at it in this context, always take the values that you are having. Don't divide by two. Take for the base period that you are looking at.
Okay.
Okay. I always advise to take the base period that you are looking at. Okay.
Okay.
Great. So then in that case, basically, we are getting how many days, kindly? 5 days?
Yes, 5 days.
5 days, right? 5 days, 5 days, 5 days. What about for 2020, 2021?
Excuse me.
Yes, please.
I'm getting confused. I don't know how they arrived at 5 days. Because I believe the question is inventory turnover period. That is the question, isn't it?
Inventory turnover period.
Yes. Then how do we get it? How did they arrive at 5 days?
I believe in 2021.
So in this case, we'll find that, and that's why Evans, you see what I've written here. How many? I'm having inventory turnover, and you're having what? The holding inventory holding period, right? Are you seeing this, Evans?
Yes.
So what are we working out here? Is it inventory turnover or basically the holding period?
According to me, it is the period.
Yeah? According to you, it is?
The period.
And that's where you're making a mistake, right? So you'll find that this case, you're looking at the number of, basically in this case, you're looking at basically the inventory turnover period. In this case, you'll find that I'm having like, I want to look at the best term to use. in this case, the holding period is literally that period that I'm going to have our item in store before they are being converted. Whereas the inventory turnover, this is the frequency, the number of time basically that I'll be selling our items throughout the period, the number of times that we'll be converting our items throughout the period. So in this case, whatever that basically we are asked is simply now whatever that you ask in this context is now the period in terms of how many number of times is it going to take us to literally convert our item into sales. That is the turnover. And the holding, how many number of times, if I told you to look at it in days, are we going to hold our items in store before they are being converted? I want to give the two differences. That's why we started by mentioning these items separate. So whatever that the good examiner is asking us here is asking us the frequency of time on this case. Frequency of time. And that's why they were very insisting on the concept of turnover. If we were being asked of the holding period, we could have been asked directly the holding period. The only issue there that majority of students will tend to confuse is that because they have asked you what? The inventory turnover period. This is simply frequency, the number of times that you're being asked. I'm not sure if that is clear, Evans.
Yes, it is now clear. Yeah.
Are you getting the difference? And that's why you should be very okay.
Yes.
So in this case, you are taking the cost of sales of average stock. So whereby in this case, you are getting 5 days, or rather 5 times. You can have it like 5 times. What about the other time? 2021?
7 days.
7. So the other bit you asked of receivables collection period. Receivables collection period. Receivables collection period. Receivables collection period. So what will you be having here as a receivables collection period? Receivables collection period. Receivables collection period. I know you guys are good on that. Receivables collection period. Receivables collection period. Receivables collection period. Can you give Molimu that? Molimu has given us that. Receivables collection period. Receivables collection period. Receivables collection period, which we have two points. You can either use receivables collection period, you said. Number one, you can consider, of course, your number of days in a year. Number of days in a year. We are going to divide this one by, of course, our receivables turnover. Receivables turnover. Or simply, you can take the average receivables of course we divide by our basically that we multiply by the number of days. We divide, of course, by what? Our credit sales. Annual credit sales. So it is upon us to identify the sales that we are given. Are we given basically credit sales? Are we given cash sales, or the question has not specified? If the question has not specified, then we assume it is what? All credit sales. All credit sales. So the easiest one will be what? Because you aren't given, because we don't have the turnover, in this case, it will be easy for us to work out with what? The second method will work very well in this context. The second method will work very well in this context. So in that case, what will we be having? The second one will work very well in this case, the second formula. And be keen, in this case, did the examiner specify on the cells? Are we given credit sales or the question was silent?
It's
Was
silent,
the question,
I think.
the question was silent, or the question specified?
No, not specified credit sale.
This is a question. So in this case, like the question sales revenue. Sales revenue basically is what? Is silent, right? So therefore, we are going to assume that it was what? It was credit sales, right? You're going to assume that it was credit sales because in this case, you can realize, you can see that the question is silent. So we take all that to be like a credit sales. So what will you be having? Mwalimu is waiting. Yeah, Mwalimu is waiting. Kindly let us wrap it up. Let us wrap it up so that we can give you this assignment. Let us wrap it up quickly.
$73.
73 what? Days, right? If I told you to clear, make sure that you're clearing it clearly. So Sadio is giving us 73 days, another value kindly. Sadio, that is for 2021 or 2020 or 2021? Sadio, the value that you've given us, is it for 2021 or 2020?
2020.
2020.
What about 2021? How many days?
I'm calculating now.
I'm given, I can see been given a value there of 91 days. I'm not sure. Maybe you can confirm. You find that these things are very
I got 91 days.
91 days?
That is 2021, yes.
2021, right? These things are very simple as that.
Year 2021 is 91, correct?
91 days.
Yeah.
Okay. So after that bit, of course, we can, no, unless anyone has a question there.
Yes, ma'am.
Yes.
Kindly repeat the second formula. You said average receivables over
The average receivables over the annual credit sales times the number of days in a year, which in this case you're given 365. So average receivables, we divide by the annual credit sales times the number of days in a year.
Yeah, that is correct.
Is that okay now?
Yes, yes.
Okay, great. So after that bit, then we proceed with the next item here. You see, these things are very simple. Like the next item, look at this case. The examiner is asking us to determine, where is this next item here? The next bit, the good examiner is asking us to determine the trade payables payment period. We just copy and paste. We just copy and paste. We just copy and paste. And if you are keen enough, the good examiner is telling us that cost of sales approximates the purchases. So we are given directly. If we aren't given, then we could have determined our purchases. But because in this case, we are told that the cost of sales approximates the purchases, then that is what you're going to use as our purchases. Remember this idea where we normally tend to determine, remember this, the cost of sales is always equal to our opening inventory plus purchases, right? Minus closing inventory. So in the event that you're looking at a question and the examiner has not given you basically the purchases, you'll always be required to determine your purchases. You'll be given the cost of sales, opening inventory and closing inventory. So it will always be upon you to determine your purchases. But this question was good. This question was good. Why is Molimo saying that this question was good? This question was good because a good examiner here, he has specified for us. Look at this. So in this case, we find that a good examiner here has told us very well that this cost of sales approximates the purchases. So there is no need of us computing the purchases because we are going to take that as our purchases. That's the reason why he has specified. You see, there's that specification. There's that specification. So therefore, that should take us back to, of course, our whatever that we looked at. So this one you're giving me 70. This is you said 73, and this one is what? Which one? Believing. So talk about our payables collection, payables collection period. Payables collection period. What about our payables collection period? We have this. We literally have this in mind, whereby we mentioned that for us to determine our payables collection period, we can either take the number of days over the creditor turnover, or rather payables turnover. Still, we can determine this by taking the purchases collection period. We can determine that by taking, my good students, our average creditors. Okay, we take our average creditors. We divide all this by our annual credit purchases. Annual credit purchases times the number of days, which in this case is 365. So you can either use the formula of taking the number of days in a year, we divide by our creditors turnover. That is one. Number two, you can take your average creditors, we divide by annual credit purchases times the number of days. So you select which one will be easier on your end. So in that case, what will you be having? What will you be having there? Because you've said this is the second formula of determining the payables collection period. You take your average credit term, you divide by your annual credit purchases, take the number of days in a year. So give me that quickly. Give me that quickly. Well, these things are very easy. Once you're able to go through the notes that Molimo has shared with us, after you've gone through the notes that Molimo has shared with us, then you do practice. These things are very, very easy. So what are we having there? 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 What are we having there?
I don't know how correct my answer is, but I have
Believe in
one
yourself. Believe in yourself. Yeah.
109 days.
What you could have said is that my answer is this one. Yeah. So believe in yourself. What is the value that you're getting?
109 days.
I'm getting 109.50.
That is like that is 109 days, right? 109 points. So that is 109 days. That is 2020 or 2021?
2020.
2020. What about 2021?
2020.
What are we getting? This should be very, very easy. Give Mwalimu the solution to that. Kindly, Mwalimu is waiting.
109. I still 109.6. Basically
2020? 2021?
Yes.
2020, you're getting how many days?
I'm getting 128.
120. 128 days on 9, which is which? Kindly let us confirm another probable value. Jacinta, you're saying you're getting 109?
Yes.
Evans, you're saying you're getting 128? Kindly let us get another point, another value, so that we can confirm who is probably what are we having, correct or wrong. 2021, I'm given on 28 days. Another value, kindly.
Yes, 127.8.
128 days.
Yes.
128 days. So means that all of us are getting 128 days. Okay.
Lecturer.
Okay. 128. So 128 days. There's nothing difficult of that. So long as you master the formulas and basically
Lecturer.
understanding why. Yes.
I want to ask you the question. What about the first one, the upper one?
The 128.
What about the average of creditors? Where is the average creditors? I can't see the average creditors.
The creditors basically you just take whatever that you're given. Like in this case, so these are what you're having. Let me have this. Where are we having the question? So we take our creditors. These are receivables. Where are our receivables? These are our receivables here, right? In 2020, I'm having receivables of 111,715. In 2021, I'm having receivables of 44,365.
Payables, yeah.
Yeah.
What about the other one? What about the other one?
Which one? Which other one? Sadio?
The equation. The equation is there are two different.
The payables.
Yeah.
See, remember receivables are debtors. And debtors, these are where we had our debtors. These are trade receivables here. And these are payables. Payables are this point here.
Yes. This one are payables. What
Payables,
are divided?
Yeah.
What are divided?
We're dividing by the annual credit purchases. So credit purchases, these are credit purchases here. You see, where we are told that cost of sales approximates purchases. You see?
Okay.
Yeah. Cost of sales approximates purchases. And that's why Molimu was saying that what if this statement was not here? If at all that statement was not there, if at all that statement was not there, we know very well that for us to determine our cost of sales, we normally tend to take our opening inventory, we add our purchases, we less our closing inventory. So in the event that that statement was not there, it will have been upon us to determine our purchases. Given our closing inventory, given our opening inventory, given our closing inventory, and given our cost of sales, we could have determined our purchases. But because the examiner was good, he has given us a caveat, then he has told us that, you know what, this cost of sales approximates the purchases. Ideally, the good examiner is telling us that you're not supposed to compute the purchases because that's the value that you're supposed to use as what? As purchases. And that's why we are taking that value there. Is that okay?
Yes.
Great. So basically in this case, there is interesting question. Remember, we've literally done it, but I want to see how you guys are going to reason about it. I'm going to leave this as an assignment. The question for ratios actually their role is very good. There's a question here that if at all it will require you to basically just reason outside the box just a bit, but we have all this in our notes by the way. There was this question, a very good question. Let me see if I can trace it. Yeah, this is the question. This is a question. Basically, I want to see how you guys are going to reason about it. Make sure that at least you've attempted that question. If possible, you share with Mwalimu basically to guide as well. Look at this case. We are asked, number one, in this case, you're told, this is which year? This is December 2022. December 2022. Question number 4. You're asked, calculate for each year 2 ratios for each of the following user groups, which are of particular significance to them. Number 1, the ratios that are very significant to shareholders, the ratios for trade payables, and for internal management. In this case, remember, the good examiner has not specified which type of ratio to compute. He has just asked you to compute the ratios that are relevant to shareholders, the ratios that are relevant to trade payables, the ratios that are relevant to internal management. But he hasn't given us the type of ratio to compute. So in such an event, my good students, how will you go about it? Remember, all those, you have them in our notes. So if you read in between the lines, the notes that Molimu shared with us, this is a walk on the park. This question is a walk on the park. This question is a walk on the park. So kindly make sure that you've gone through that so that I want us in the next class, for those who are going to do, make sure that you've shared with Molimu to assist us, basically where you will find difficulties, so that our next class, I want us to introduce the next topic. In our next class, we're going to introduce topic number 1. Remember, this was topic number 7, which ideally we are done with that topic. Next class, we're going to introduce topic number 1. Remember the strategy that Molimu shared with us in our first class. how we'll be clearing a FAR within this shortest period of time. So to that point, no unless there's a question, Mwalimu will want to wish us a good night, and basically we meet in our next class. For those who are doing FM, of course, or tax, we're going to meet tomorrow. For those who are not doing them, we're going to meet in our next sessions. So any questions to this point?
Lecturer, I want to ask you one question.
Yes, please.
How many days in the class?
2 days for a FAR, Mondays, Tuesdays.
Monday?
Monday, Tuesdays from 8 to 10. That is financial reporting. Financial management, Wednesdays, Thursdays, 8 to 10. For those who are doing other units like
what are management accounting?
Management accounting, Monday, Tuesdays, 6 to 8.
Monday, Tuesday, 6
to 8. Yeah. PFT,
okay, wow.
tax, Wednesdays,
2 days within a week.
2 days in a week.
Okay.
Yeah. Tax, Wednesdays, Thursdays, 6 to 8.
Okay, taxation. Okay. What about auditing?
Auditing, we only have pre-recorded version, but we'll be doing live sessions during revisions.
I'm past the taxation and finance and company law.
Sure. So we meet tomorrow then from 6 to 8. Great.
Which subject? Taxation.
Taxation, yeah.
Already I passed taxation.
At taxation intermediate level.
Yeah, I'm passed.
Advanced taxation Saturdays from 6:30 to 10 in the evening.
Oh, okay.
Yeah.
Thank you.
Great. You guys have a good night. See you next time. Bye.